All right, let's do a little bit of math here. Let's say you stumbled into an opportunity where you can buy a house for 60,000 because it's just been blasted, right? It needs work. And then you've had a really good contractor roll through and say, hey, for 65 grand, I can have this thing spit polished and looking really good. And you could rent this thing out for a pretty good amount of money. So you really got 125,000 this thing. But then you look across the street and there's a house that's almost identical that just sold for 155. It's like, I'm in this thing for 125 and it's worth 155. So let's do some math on this thing together. So if you're in it for 125, and let's say you paid cash for this house. Let's say you did a hard money loan to yourself. This is what I do. I'll go buy a house with an LLC, and that LLC goes into contract to pay cash, but I have my trust lend the money to my LLC. So I'm not going to go into any greater detail than that, but now I have a lien against the property. So there's the lien sitting there that now this LLC I purchased it with has to pay that lien back for $125,000. Well, we get an appraisal on this because I put some time into it to make sure. And I have a $155,000 value here. Well, I can do an 80% loan to value rate and term refinance on that. That's $124,000. I paid 155. I got a $125,000 loan. I got to pay back to my trust, to not my trust, to the family trust. But I can get a $124,000 loan. So that means I'm out $1,000, but I got to pay the costs on that loan. Let's say there's a bunch of fees. Let's say it's like 12 grand, right? But I also had to do the acquisition thing. So there's another $1,500. So now I'm 12, 13, 14, 15. So I'm $16,000 into this situation, right? 16 grand. Now, these are just round numbers. By the time we get done, it might be more than that. And I'm 16,000 into this. Now, I have this property into 30-year fixed at $124,000 loan. I've got $16,000 in. That $124,000 loan is going to be paid by who? If I'm doing my job right as a real estate investor, it's going to be paid by my tenants. You take the $124,000 divided by 30. That's 30 years. It's going to take my tenants to pay it off. That's $4,133. Hopefully, you're following me. You might have to slow down, redo this a couple times. $4,133. I divide that into my money that I've had invested in this thing, where I say it was 17 grand. We're looking at 24%. That $4,133 every year, averaged over 30 years, my tenant is paying down that mortgage. That's 24% that I'm making on my 17,000 I had invested in this deal. Now let's say that we have, I think I remember 17,000. I'm just going off the top of my head here, guys. Now you have a $155,000 property that's appreciating by what? Most markets, 5-6%. Let's say it's 2.5. So 2.5%, that's $3,875. So 155,000 times 0.025, you're looking at $3,875. That's how much that place is appreciating at 2.5%. I invested how much again? I invested $17,000. That's 22%. Look at that. That's pretty significant. Where I'm getting a 22% on that one, and I was getting 25% on the other. That's not hard to deal with. Actually, no, I was getting 24% on the other. So 24% plus 22%, look at where we're at 44%, 46% return on the money I invested on this property because I did it a certain way. If you think that's a pretty decent deal, something you might want to jump on, you might want to call me. Let's talk about those. Let's talk about how to structure that. Talk about where to look for that, how to do that. It's just another way to keep going in real estate investing. The other thing is, if you don't have your entity set up, we need to talk. I need to connect you to my folks. Got to go to my website. In fact, I'm just going to share a screen with you right now to the website, aaronchapmannjo.com. Let's go ahead and get there. And you just need to scroll down right here. Right there. Set up your LLCs to get started. It takes you here, and you're just going to fill this out. And you get to talk to a law firm that is not going to stick you in the ass. They will help you set up your trust the way we've set it up. They'll help you set up your holding company. They'll help you set up the entities, the LLCs that hold your real estate. And they're not going to charge you a ton of money to do it. I have so many people who have had to do this. They've done it and they paid $16,000, $17,000, $18,000 for it. That's not what I want you to have to do. We will help you. I've tried to find all the right people to help you get these things done. Now let's talk about the market. let's look at what's going on out there. You had the Fed minutes yesterday, and that had some influence, right? But the Fed minutes indicated that there is a little bit of shift in some rate cut expectations. The median prediction, again, everybody's still just predicting we're going to get a couple cuts this year, maybe a couple cuts next year. I don't know. It seems like there's a little bit of a saber rattling, a standoff going on. There's some stare downs happening about that kind of stuff. But we do know that every time they've cut the rates in the past, what did it do? It pushed the rates on long-term items up. It's a short-term rate that doesn't influence the interest rates on mortgages. But because of that, it did push some traders in there. They kind of played their hand a little early on what they think might happen. And then you've got today's jobless claims that came out. The initial claims dropped. They dropped quite a bit. The last initial claims were showing 232,000 dropped down to 227,000. It was forecast to be 242. You're expecting it to go up, but it went down a lot compared to the expectation. Continuing claims, they are up just a little bit. So people continue to maintain their jobless claims as they're hunting for something. But as a result of that, everything that happened yesterday with the Fed minutes and all the other things that pushed traders to get into it was pretty much reversed. So we had come off of that bottom that we talked about on Tuesday. We were heading down. We were stopped by that moving average, rocketed up above the other, actually right up to the other moving average, really just a little above it, and it came right back down. We're squeezed between those two moving averages. Let me zoom in on this a little bit so you can see that. See, we stopped on that moving average on Tuesday, came up. This moving average, I don't know if that was really the stopper, but that's where we opened, was at that, and then come back down. We're right on it. So traders are really not shoving a whole lot of capital. And you got to remember, it's not what the Fed says, it's not what the government says about the interest rates. Your long-term interest rate is dependent upon who wants to put money in a pool of funds to get a return on investment from you paying your interest. That's it. This particular source of funds here pays them 5.5%. What's real inflation? It's a lot higher than that. And inflation is just an annual increase on what it already was. It keeps going up. It's not like it settles down to some point. We talk about the Taco Bell index, I said before. In 1994, 30 years ago, it's now 31, 2 crunchy tacos, 2 bean burritos, and a drink were $1.99. Now it's about $15. That's an 800+% swing in the value of the dollar's buying power. It's going to keep going up. These guys only making 5.5% of their money. They're not excited about that. That's why you're seeing some money flow out of it. It's not an exciting thing. If the stocks are doing well, they're going to push money over there. They're going to push it where they think they can get more capital. You need to put it someplace you can stick it and let it grow. We just talked about an enormous growth of a 40% return before cash flow, before tax benefits. You can see that. The problem is we all get wrapped up in what's my cash flow every single month, and we forget about the other ways that our money grows sitting in real estate. Don't get caught up in that. Don't let the cash on cash return steer you away from something awesome. We should talk. So text me, 602-291-3357. I'll get you on the calendar and we'll talk about this. Get you lined out. Find these kind of deals. We got people out there we can help you with. There's a lot of opportunity maybe walking away from. Let's not do that.